Thank you for taking the time to listen to this investment opportunity to invest with me in a project that I'm calling the Civic. The Civic is a project that I've personally been invested in over the last 5 years, since 2019. The Civic is a project to build 54 apartment units, 100% market rate, meaning no inclusionary low-income housing requirements, in the city of El Cerrito, which has been entitled since 2020 and was just most recently fully approved building permits. The site has been completely leveled and is shovel ready to go vertical. My name is Brian Beniquet. I've been in the real estate industry since 1991, starting out as a humble real estate agent selling houses. From 1991 to 1998, the majority of my focus became helping investors, which I myself became one as well, to find multifamily investment opportunity or apartment buildings to buy in the Bay Area. Good opportunities that would not only provide a good cash-on-cash return, purchase at a good cap rate, but provide a clear entry, meaning acquisition, as well as exit strategy or sale opportunity to be able to continue to build their portfolios. That company, BCRE, which I founded back in 1998, comprised of 8 real estate agents that grew to 80 real estate agents, including myself, primarily helping investors to find good business opportunities, spawned additional companies, such as a finance side, which helps me and my colleagues, as well as my clients, to not only find apartment buildings, but put together and assemble the much-needed financing to acquire them. It also spawned a property management company that serviced the needs of not only myself, as an investor, buying apartment buildings, buying office buildings, buying retail, but also that of my clients, whom we sold apartment buildings and retail centers to. So it's that history and background that I bring to the table, not only as a multifamily specialist, a finance specialist in multifamily acquisition, a property management specialist with an entire firm behind me, but also the years of experience as a developer building housing in the Bay Area, building ground-up projects, using the experience that I had in the team that I had built with these vertically integrated companies. And I was successfully able to build a 64-unit condo community. We built 64 condos and we sold 64 condos to individual buyers. We repeated that process on 3 other projects for a total of 4. We built a 64-unit condominium complex, a 20-unit complex, a 24-unit complex, and a 14-unit townhouse complex. So I cut my teeth as a developer back in 2004 to 2008. Now, I know it's 2025, so I'm dating myself here, but I wanted to give you some background so you understand that you're not just investing with someone who's been in the business for the last 5 or 10 years, but you're literally investing side by side with a seasoned veteran who owns multifamily, owns retail, owns office, and is still continuing to do that to this day. The Civic, located in the city of El Cerrito, just 10 miles outside of San Francisco, is a project surrounded by multiple employment centers or cities with multiple employers providing multiple jobs for employees seeking housing. The opportunity here is to be able to invest with me in this project. I'm providing not only short-term opportunities to investors, but also entertaining longer-term opportunities with equity partners with higher internal rates of return. The Civic is an opportunity to build a 54-unit apartment complex at the cost of around $20 to $21 million. Now, out of that $21 million to build this project, I've already got vested $5.5 million of my own capital since 2019 that was put into not only the acquisition of the site, the demolition of the existing building that was there, the soft costs, all the architectural fees, and our infamous impact fees in California, while simultaneously mitigating that the future value of this property would still be ahead of its cost. So what does that mean? Even though we're looking at a total cost of about 20 to 21 million, of which I'm seeking about $17 million of equity, again, we'll get into that in a second, the project as an apartment complex provides a income stream or net operating income stream that gives it a future value of $31,800,000. Again, these are numbers that I have backed by appraisal reports. Yes, there is a tremendous amount of upside and opportunity in this project, which you as an investor, whether you're going to be a short-term investor with me or potential longer-term investor with me, could look at as security for your investment. That would provide you not only a clear direction on how to invest with me, but also a timing. How quickly would you look to invest your money with me and potentially exit with the return in this project? Again, the capital that I'm seeking would be to move forward with going vertical on building this fully approved, fully entitled, building permit ready, 54 units of 100% market rent apartments in the Bay Area. Now, the project itself, I'm seeking to go modular. Now, for those of you who are not familiar with modular construction, and this is as opposed to ground up stick build construction, is that modular moves much faster. So to build this 54 units, if I were going to go ground up stick build, where when we bring all the materials to the site and we start building it, would take roughly 24 to maybe 30 months. So roughly 3 years before we're getting close to having our certificate of occupancy and then start renting out those units so that as equity investors, you'd be able to then now see the return of your capital plus your return. That's if we went ground up construction or stick build. In the case of what we're trying to do with the Civic, I have lined up vendors who would be looking to build this with me on a modular scale. From the capital that I'm seeking from you as investors, we would be deploying that capital to go modular. We should be able to have the thing done within 14 months. At the same time, or concurrent to the time that I'm building the concrete podium for this complex, which would comprise the street level retail area as well as the parking, off-site at a factory that I've aligned with, they would be building the second floors through the fifth floors of this complex. Within 6 months of this capital being deployed to about 7 months, we should have a fully erect 5-story, 54-unit apartment complex called the Civic. Now, we're not ready to have the place occupied yet at that time, and we're looking at yet another 6 to 7 months before we are fully wrapped, putting all the finishing touches, but more importantly, getting the certificate of occupancy from the city to then have the green light to be able to then bring potential residents into the complex. At which point, now as investors, we're looking at that potential to be able to exit or potentially stay on for a little bit longer, depending upon your investment appetite. Now, again, I know a lot of these terms might be new to you as a first-time investor, so take this opportunity to note down questions and click the link and let's figure out a time that we could talk about whether this is a correct investment for you. But moreover, I wanted to give you a picture of what we're talking about. And I wanted to draw your attention to and walk you through side by side the offering memorandum. If you're on this site listening to this video, you've already seen what some of the pictures of the Civic look like. Here is a picture of the Civic, which is again a 54-unit apartment complex in downtown El Cerrito, just 10 miles outside of San Francisco. And here's other multiple angles of it. And here's a picture of the site down here, which was formerly an office complex. Ironically, just a fun fact, back in 1998 when I first started my own real estate company was the site of my first real estate company. I came back later in 2019 and bought the building when I found it for sale, but the opportunity or the highest and best use was to get it approved for a completely different use, in this case, 5-story, 54-unit apartment complex. And now, as you can see, the site was fully leveled and is now a site ready to go vertical on a construction project. The project itself, as I mentioned, is a modular project, and so you can begin to see what I mean by this ground floor area as the concrete podium, and then the second floor through the fifth floor would be the areas where the residences would be. Within the offering memorandum are floor plans, but here on page 12 is a summary of the use of funds and then also the capital that I have invested into this project. Again, we're looking for investors, and we have different opportunities for investors to participate, whether they're just looking to place their capital for a 2-year period with me at a rate of 10% annually or a 20% ROI at the end of that 2 years, or be able to invest with me potentially on different terms. Again, I'm open to those types of negotiations. We can set up a meeting and talk about how we might invest a little bit differently. For those of you who are more interested in the existing PPM or private placement memorandum that outlines what your investment capital would look like on a 10% annual return to you within 2 years, it should be part of that remaining $16.5 to $17 million that I'm seeking in order to finish this project, get it fully rented out, and realize its future value of about $31.8 million. From that point is when we would be looking to have the opportunity to return your capital plus the investment that we've put together as equity partners. I'm open to longer term opportunities rather than just 2 years, but that might be on an individual case-to-case basis. So feel free to reach out to me and let's talk. Within the offering memorandum are outlined the annual income that this property would make from the various income streams, which would not only include the rental income from the 54 units, but also the parking income and also the additional solar income. The project is approved for solar panels and batteries that would accommodate being able to sell back some of the electricity to the tenants as an additional revenue source, as well as a contract that I have with Comcast to be able to purchase all 54 units at a wholesale rate for the high-speed internet, which could then be sold back to each of the individual tenants at a profit. All those 4 income streams total to about $2,031,000 a year, whereby we apply the typical expenses that go along with underwriting to determine our net operating income, which would be about $1,494,000 a year of net rental income. A capitalization rate applied would dictate that future value of $31,800,000 that I'm referring to. Now, for those of you looking at the offering memorandum, this income and expense that commands that value of $31,800,000 is based upon the possibility of selling the property to another investor like a REIT, for example. And those expenses would be dictated upon the purchase price primarily because of the property taxes of that new potential investor. Now, the reason I brought that up is that I'm looking more for long-term investors that might want to stay on a little bit longer once the project is completed. And for those investors who might be seeking a longer-term opportunity, it gives us the opportunity to be able to make a significantly higher net operating income. And you can find that here in this column called owner keep, whereby the net operating income would be significantly higher, about $1,712,000 more annually, which commands a much higher value than $31,800,000. Now, the reason that this would be the case is because California assesses its property taxes based upon the last sale. So when the state of California assessor assesses the property taxes that are mentioned within this offering memorandum, my property taxes, if we didn't sell it, would be about $200,000 less than what a potential buyer purchasing it at $31,800,000 would be. And the reason that is because our cost basis by which a tax assessor would calculate our property taxes would be based on about 20 to 21 million, which would be the cost of the acquisition of the land and the soft cost for architectural and building permits, but also the actual improvement or the building that sits on top of the property itself, which totals roughly that $20 million. Well, as you could probably figure out, the property taxes would be significantly less on a building that's assessed at a $20 million valuation versus if we sold it to a new buyer at $31,800,000. And so from that possibility of keeping the project in our portfolio and getting it reassessed based upon the capital we have into it, we could look at a significantly higher net operating income. That difference is a net operating income of $1,494,000 versus a potential income, if we keep it, of $1,712,000 a year. And that's simply because of the decrease of property taxes based on the difference between $31.8 million calculation on property taxes and $20 to $21 million calculation on property taxes. So again, this provides multiple opportunities for investors who might just be seeking to get a return on their money over the next 2 years, to investors who might be looking to stay in a little bit longer, 5 years to 7 years, or even longer than that, and then exit. You'll find within this presentation platform are means by which you could also access my calendar and set up a time to talk further about different ways we might be able to work together. Again, I'm Brian Beniquid, and I want to thank you for taking the time to listen to this presentation, and I look forward to hearing from you soon.